Dear clients, welcome to Phillip Capital Weekly Market Watch. I'm Caroline, Analyst from Phillip Securities Research. Today, I will share with you on Singapore commercial sector, namely office, retail, and hotel outlook. First, we'll look at the office sector. Office is the best performing subsector in the real estate industry for first half of 2014. The listing activities and inquiries remain healthy with particular focus in the CBD area. The demand is driven by flight to quality trend and expansion or setting up of regional office in Singapore. Majority of the leases are taken up by small space occupier at about 10k to 30k square feet deal dominated by commodities, e-commerce, and FMCG companies. The rental rates for first half of 2014 went up 5.6% in the central region with a low 5% vacancy rate for Grade A office. The net absorption rate for second quarter of 2014 was positive at 237,000 square feet, up from 65,000 square feet in first quarter of 2014. The CTP office supply will remain tight for the next 2 years, with Capital Green and Southbridge Tower due for completion this year in the town area. Overall, we are still positive on the office outlook, with office rental growing at a slower rate in second half of 2014 on back of tight office supply in 2015 and current low vacancy rate. Demand for Grade A office in the prime location will remain robust, though there may be possible dips in the Grade B or older office building. For the retail sector outlook, retail sales index X motor vehicles slide 2.1% year-on-year to 110.4 in June on a seasonal adjusted basis. Discretionary consumer spending in June fall mainly due to the decline in tourists from China. Rental growth is flat about 0.4% quarter to quarter with tenant resistant to rent increase. Occupancy rate of prime retail space is 98.2% for second quarter of 2014. Listing activity stays healthy with 3 new malls open in this quarter. They are Orchard Gateway, Kallang Wave, and One Raffles Place with 80 to 100% occupancy rate. We stay neutral on retail sector in second half of the year, considering the huge retail space supply in 2014 and 2015, and rents are likely to stay competitive. Next, we move on to the hotel outlook. Hospitality underperformed this quarter. Tourist arrival down 8.4% to 1.18 million for June 2014. Fourth consecutive month of year-on-year decline since March 2014. The decline is attributed to the 30% drop in China tourists due to new China tourism law, missing flight MH370 incident, and political unrest in Thailand. To reach Singapore Tourism Board target of 16.3 to 16.8 million visitor arrivals in 2014, we will need 12 to 19% year-on-year in growth in arrivals for the second half of 2014, which we feel that this is a downside risk to the target unless there is a substantial spike in visitor arrival in the second half of 2014. There is mixed performance for the different tiers of hotel. Luxury hotel segment continues to be good, while the mid-tier and economy hotel segments are most affected by the decline in China tourists. Hotel new room supply is projected to be 11,000 rooms over the next 4 years, with 15% of the pipeline in 2014 and majority in 2015 to 2016. We stay neutral in the hotel sector for 2014. Demand is expected to improve with the opening of new attractions, Sport Hub, and National Art Gallery, and the government effort to strengthen Singapore's position as Asia's top MICE destination. The upcoming supply pipeline will limit room rate upside. We expect an increase in tourist arrival on a year-to-year basis in 2014, but it will be below Singapore Tourism Board initial expectation. These 3 subsectors are to stay resilient for the year, though there is lack of bull run catalyst in sight. We prefer counters with a geographical diversified portfolio with accretive investment pipeline and strong recurring income. We recommend buy for Amara Holdings and accumulate for Hobin Land and OUE Limited. With that, I have come to the end of the presentation. Thank you for watching this week Market Watch. I am Caroline from Phillip Securities Research. Please subscribe to us on Phillip Capital YouTube channel and Facebook. Stay tuned for more Market Watch videos.